Hi everyone, give us a couple minutes to let everyone join. Making sure on my end we are live on Facebook. And we'll give everyone a couple minutes to join. Welcome. It looks like we've reached a steady number, so I'll go ahead and introduce myself. My name is Suleimi Delgadillo, and I am the Digital Outreach Specialist with the Department of Insurance. And I want to welcome you all to our residential insurance webinar, the third of our consumer learning series. A couple people joining. Like I mentioned, this is our consumer learning series. The topic for today will be residential insurance and what you need to know. We have a number of great guests joining us as well. All right, looks like we're good to go now. So before we get started, I want to go over a little bit of housekeeping. We are recording, so audio, video, and chat will be monitored and recorded for this. We are also live on Facebook. So if you missed at the beginning of this or you want to rewatch it, the fastest way to do it is go to our Facebook at CDI, California Department of Insurance. This is a webinar setting, so the audio and video will be on only for our presenters. By default, all participants will be muted and video disabled. And like I mentioned, video is only on for our speakers. So I'll go over our agenda. First, we'll hear from Andrea Valdez. She is our outreach specialist. Then we will hear from the California Fair Plan, Bill Orwin. And we will then move on to the California Earthquake Authority. We have two speakers, George Sittner and Janelle Muffy. And then we will go to FEMA with Carlos Rendo, and we'll close it off with Q&A with Andrea. So I'll pass it over to my colleague Andrea, who will get us started today.
Thank you, Suleimi. I really appreciate it. Hello, everybody. Thank you so much for being here this evening. I truly can't thank you enough. So today we're going to be going over residential insurance. So first, I'm going to tell you a little bit about CDI. So the California Department of Insurance, also known as CDI, is a state agency, and we regulate the insurance marketplace. We regulate all lines of insurance, including homeowners, auto, life, and that's just to name a few. We also regulate the insurance companies, agents, and brokers that sell insurance. All of CDI's functions, including overseeing insurance solvency, licensing agents and brokers, conducting market conduct reviews, resolving consumer complaints, and investigating and prosecuting insurance fraud, are to protect consumers. As a consumer, if you ever have a problem with your insurance company, agent, or broker, just please contact us for help. Next slide. Today, I'm going to give a practical overview of residential insurance, what it covers, what it doesn't, and key tips consumers should know. Now, insurance helps reduce financial risk from unexpected events, and many people assume that insurance only covers property damage, but policies also protect belongings, liability risks, and additional living expenses. Next slide. These 6 sections make up a standard homeowner's policy. The homeowner's policy contains 2 sections. Section 1 provides property coverages A, B, C, and D, while Section 2 provides liability coverages, and that's E and F. Now, if you'd like to review each of these in more detail, I do have my colleague Sharon. She's going to be putting a link into the chat that goes directly to the residential claims guide. And as you'll see through this webinar, if you look at the chat, we'll have all of our helpful links in there as well. Next slide. So first, as you can see, what is typically covered? So over here, we have generally covered, which is fire, theft, vandalism, wind and hail, also smoke damage, and sudden accidental water damage. And then also earthquake, flood, mold, earth movement, and wear and tear are some of the perils that are usually excluded. And again, these are just common examples of common covered perils, but every policy should be reviewed carefully. Next slide. Now, homeowners insurance is a vital component to the protection of your property. By knowing and understanding the coverage and limits of your policy, and by making sure that values are current, you greatly add to you and your family's peace of mind in any loss situation. Now, recently, there was 2 major problems that were experienced by homeowners with the residential property homeowners insurance policies, and that was in the aftermath of the past California wildfires. The first one was that many of the dwellings were uninsured, so they were insured for amounts inadequate for rebuilding. Now, insurers sometimes refer to this as inadequate insurance to value. And 2, the problem of increased cost of construction was evident in many situations. When rebuilding, homeowners have to comply with the new building code requirements. In some instances, the difference between dwelling limit and the code upgrades was a significant amount. Also, the extreme heat of some fires and some building code requirements necessitated the building of new foundations and the removal of debris from the damaged foundation. Now, this is a situation that can be easily overlooked when determining building limits. An important part of owning any property is protecting the property to the best of your ability. Also, one thing I did want to touch on a little bit was renter's insurance. So your landlord does not provide insurance for your personal property. So to protect your belongings, you should consider purchasing renter's insurance, and that's also known as tenant's insurance. Coverage is also provided for loss of use, personal liability, and medical payments to others. Next slide. Another thing that I wanted to add is the cost of homeowners and renters insurance depends on a number of factors, such as location, local fire protection, age and construction of building, choice of deductibles, application of discounts, and the scope and amount of insurance coverage you purchase. Under the California law, each insurance company calculates its own rates, subject to the California Department of Insurance approval. Since each company's loss experience differs, the rates are going to differ as well. It is wise when shopping to review and compare all quotations to determine if the coverage deductibles and limits are similar to each other. You have to make a list of what's important to you and be sure to discuss it with the agent. To help find competitive rates, CDI is pleased to offer online premium comparisons that cover over 90% of California's homeowners and renters insurance market. And again, you can review these comparisons via the CDI website. We're also going to be adding that link to the chat. And just to reiterate, one of the largest issues after a disaster is being uninsured. Next slide. Now, filing a complaint is simpler than most people expect. You can do it online, by phone, by mail, or even use the live chat feature on our website. Before you reach out, though, you want to definitely have a few things ready, because the more organized you are, the faster you can fill out that process, that complaint process. So you're going to want to have your policy number on hand, write down the name of your insurance company, your agent or adjuster, if you've been working with one. You're going to want to put together a timeline. So when did that incident happen? When did you file the claim? And what responses you have received and when. The more clearly that you can tell the story, the better position you're in. Now, once that complaint is filed, CDI is going to contact your insurer on your behalf and require a response. We investigate whether the insurer followed the California law and their own policy terms. Now, we can't make any legal judgments or award damages. That's what the courts are for. But they can apply real regulatory pressure, and insurers take that seriously. They can also help mediate disputes, and in some cases, that's enough to get a stalled claim moving again. At CDI.com, You can find a complaint submission portal where you can file and track your complaint online. We also have a license lookup tool where you can verify your agent or insurance company is properly licensed in California. That's something you always want to do. And a rate comparison tool to help you shop for coverage. And we also have a ton of libraries of consumer guides and publications. Now, if you prefer to talk to someone directly, we do have the consumer hotline, and that number is going to be 1 800 927 4357. And we have staff that can walk you through the process and answer any questions you have. Next question. Next slide. Sorry. And to keep you updated with our efforts through legislation and regulations already passed, please sign up for our consumer alerts. We also send out a ton of information on issues and fraud prevention. Next slide. And we also have our next upcoming webinars. You can also go back and watch our previous one on YouTube. So we're going to have August 19th, we're going to have our health insurance webinar, and then we're also going to have October 21st, our business webinar as well. So with that being said, I'm going to introduce our first presenter, and this is Mr. Philip Irwin. Mr. Irwin has over 30 years of experience in the insurance industry. Phil brings a powerful combination of deep expertise and real-world insight. He currently serves as a broker liaison for the California FAIR Plan, where he plays a critical role in connecting brokers, communities, and the FAIR Plan to navigate California's rapidly evolving insurance landscape. Thank you, Phil. The floor is yours.
Thanks for having me. I am going to also introduce Pooja. She is, if we're going to co-present, can we do that together? If we'll be on screen together, does that work?
That's perfect.
All right, Pooja. Sorry. Okay.
All right, I will go ahead and share my screen. Let me know if you're able to see my screen.
There we go. It's just coming up now.
Okay. All right, just want to make sure everyone can see my screen and hear me as well.
Yes.
Okay, wonderful. Good evening, everyone. My name is Pooja Mukherjee. I am the California FAIR Plan Chief Information Officer, joining my colleague Phil Irwin, our broker liaison. First of all, thank you for having us here and for the opportunity to talk about the FAIR Plan, who we are, what we offer, and what purpose do we serve in this great state of California. Let's start with a quick overview of what the California FAIR Plan is and why we exist. So California FAIR Plan serves as the insurer of last resort. What that means is that our mission is to provide access to basic property coverage to all Californians who are looking for insurance in the voluntary market are unable to purchase insurance in the voluntary market. We were instituted with the purpose of being a temporary safety net and not a permanent solution. The idea was that no one should fall through the cracks through no fault of their own. That also means that we cover regardless of property's fire risk. In terms of how we came about, right? The key thing to remember is that we were created by statute. We are a private organization. Sometimes the perception is that we are a government agency. We are not. We are also not for profit, and we are not funded by taxpayers. What we are is a non-voluntary association of insurers licensed and writing new or renewal property insurance in the state of California. So we are backed by the voluntary market, and that essentially means that they share in our profits and losses. We're also not unique. We are one of over 35 similar organizations across the United States, across different states. Let's talk about how we are different and what we are not. So as I said, we're not a state entity. We were created by statute. We're not for profit, and we're not taxpayer funded. We're also we do not appoint agents. So all registered brokers work with us, but not for us, right? They work on behalf of the FAIR Plan. And we also do not market directly to consumers. We work through the broker community. Anybody that is registered and licensed in the state of California to be a broker can register with us and work with us for their consumers, for their end customers. Um, when I say voluntary market, I essentially mean the average admitted carriers like State Farms, the Mercury Farmers, and you get the point. We are continuously encouraging customers and insureds and brokers to regularly seek insurance in the voluntary market in order to access adequate coverage. In terms of understanding the FAIR Plan a little bit more, just to kind of give you a little bit of history here, we were established in the 1968 following the Watts riots and major brush fires in LA. Needless to say, we are a different company now. We've evolved into becoming a catastrophe insurer with the rising risk of wildfire exposure and overall, more lately, unavailability of insurance due to pauses in the industry. As mentioned earlier, we are supposed to serve as a temporary safety net, and we're not intended to compete or replace the average insurers in the voluntary market. We are regulated by the department, so all our rates and forms all go through the department, are filed with the Department of Insurance, and are approved by the California Department of Insurance. So this is where it gets a little real. Where are we today? As I was saying, we started in LA back in 1968 as an insurer of last resort. We have spread almost all across California now, very close to home. I'm from the Bay Area, closer to home here near Tahoe, near Orinda, several places. So this is where it gets real, and we have grown 152% since September of 2022. And now we're looking at ourselves as one of the largest property insurers in the state with nearly 685K policies, active policies. And what that does to our exposure, as you can imagine, that has exploded to 750 billion in exposure. That is a big shift from the last resort role that we were designed for. The next few sections would actually like to talk about what do we actually offer in terms of our products. And I will invite Phil to talk through our products in a little bit more detail. Thank you.
All right. Thanks, Pooja. Can everybody hear me okay?
Yes.
Okay, awesome. So just taking a look at the products that the FAIR Plan offers. So we can go to the next slide, please. So our policy is what's called a named peril policy. So as Andrea talked about, perils that are covered under homeowners policies, all of our policies are customizable, where you can actually select each peril that you want coverage for, as well as your coverage limit. So our policies are not automatically packaged like your typical HO3 policy or homeowners policy. So you'd work with your broker to select the perils that you want included on your policy specifically. So our policies that we offer, we do have a dwelling fire policy that covers for primary occupancy of a homeowner, secondary occupancy, if you're doing short-term rental, tenant occupied, if it's vacant, those are all areas. So it's very flexible in that respect. It also works as for walls in coverage if you've got like a condo or townhouse or renter's insurance. So that's all covered under our dwelling fire policy. We also have, and then again, it does cover multifamily units up to 4. So that would be under the dwelling fire policy. So if you're going to need, if you've got 5 units or more than 4 units, you would go for a habitational multi-unit. home, you would have or structure, you would want to write that under our commercial policy. So our commercial policy, we cover business owned buildings, including habitational units, retail, mercantile, manufacturing, farm, wineries, and office buildings. And again, as I mentioned, if you've got an individually owned habitational building with 5 units or more, that would be on the commercial side. And we do offer earthquake insurance through the CEA. That's an offering to all of our insureds. And we can go to the next slide. So other important things. So there are some perils that are not covered, or some aspects that are not covered on the FAIR Plan or available for the FAIR Plan. And the three primary components would be water damage, theft, and liability coverage. So those are things you can get through what's called the difference in conditions policy. It's a DIC policy, and there are other terms that are used out there in the marketplace. Sometimes it's referred to as a wrap or companion policy, but basically the perils that it covers is that water damage, theft, and liability. So this policy, coupled with the FAIR Plan, would give you all the primary coverage that would be on a standard homeowner's policy. Something that's very important to be aware of is we do offer 12 discounts for home hardening, and we have a community discounts and also home hardening discounts. So for both the immediate surroundings and the protecting the structure. So these are great because now, if you can, in the past we had it as a package, and now you can qualify for any of the discounts individually. And that's something you want to work with your broker specifically to help to see which discounts you would be eligible for, and they can assist you with getting your policy endorsed, so you can receive the benefit of the discount if you do meet the requirement. So go on to the next slide. So the community level discount, this is also very popular. So there's two aspects of this. There's the fire risk reduction community and also the FireWise community. So those are two community discounts that are available. So again, you want to work, if you do qualify for those, our system does pick up the FireWise if it's an established FireWise organization that's been in existence greater than 6 or 9 months. Our system would pick that up. But if it's a newer FireWise community, you'd want to have that certificate available and work with your broker to get your policy endorsed to make sure that discount was added. And again, the fire risk reduction community, we're still, if your community is designated through the Department of Forestry, right now we're recognizing the 2024 list. That list is going to be updated this summer. So definitely keep an eye open for that. If you weren't on it before, maybe your community would be on it, and you'd be eligible for the 2026 list. So again, you'd want to work with your broker to make sure that you had your policy endorsed if you are eligible for that discount. So we can go to the next slide. And then again, if you have a claim, you want to go straight to our website. It's you can just Google California FAIR Plan. It's www.cfpnet.com. So you can report a claim on our website and initiate the process from there. Pooja, do you want to take over?
Yes, thank you, Phil. Yes, as Phil was mentioning, just want to add to that, all our FAIR Plan claims are covered, and we pay them according to the coverage in accordance with California law and the terms of the policies, as was noted before. So we encourage you to pay close attention to your policy and the details of the coverage. Our website is a one-stop shop for consumers, brokers, your payments, claims, policy status, and loss prevention resources are all there. We encourage you to bookmark cfpnet.com and use this QR code to find a ton of FAQs and information about us. We post a ton of information on our website. In terms of what's next, looking ahead, several enhancements have already been rolled out in the last 3 years across our growth phase. to sort of, address that. But we also more recently rolled out a feature for recurring payment so that customers can now enroll in recurring payments for 3 or 11 pay plans. And later in the year, we'll be adding additional enhancements for the recurring payment option. Along with later in the year, we're also rolling out the replacement cost optional coverage for manufactured home, and updating our dwelling policy rate change according to the latest approvals. And that brings me to the end of our presentation. And I again thank you for the opportunity, and hand it back to Andrea.
Thank you both so much. I really appreciate it. Next, we're going to be moving on to two amazing presenters from the CEA. We have Janelle Maffei, and she joined the California Earthquake Authority as Chief Mitigation Officer in May 2011. She was responsible for the mitigation plan that includes the California Residential Mitigation Program and the development of comprehensive guidelines for the retrofit of single-family dwellings. She has a whole long bio. This is just a little short one. And George Sittner, CEA Chief Insurance and Claims Officer, with over 40 years in the property and casualty insurance sector. George joined the California Earthquake Authority in July of 2023. He oversees the claims and insurance operations at CEA. George has also worked for several private sector property and casualty insurers in a variety of leadership positions. Thank you so much for being here, and take it away.
All right. Thank you very much, Andrea. My name is George Sittner. I'm the Chief Insurance and Claim Officer here at the California Earthquake Authority. Go to the next slide, please. I'm here to tell you about the California Earthquake Authority, or as we know it as CEA, help explain what is earthquake insurance, how can you buy a policy, what does it cost, how do I file a claim, and some alternative insurance providers for earthquake coverage. If you go next slide, please. About CEA. CEA was born in 1996, formed through legislation. We are similar to the FAIR Plan. We are not for profit. We are publicly managed. We report to a governing board consisting of designees from the governor's office, the treasurer's office, the insurance commissioner, the speaker of the assembly, and the Senate Rules Committee. We are privately funded. We are not a state agency. We are funded through policyholder premiums. In California, residential insurers must offer earthquake insurance. Your residential policy will not have earthquake coverage by itself. A residential insurer must either offer it through an endorsement or provide an alternative offer, in which case California Earthquake Authority is one of those options. CEA has 20 participating insurance companies. Those participating insurance companies sell our policy, service our policy, bill policyholders, and handle our claims. And we are one of the largest providers of residential earthquake insurance in the world. Go next slide, please. What is earthquake insurance? Our earthquake insurance policy is just that. It's a monoline policy. It only covers earthquake damage subject to the terms and conditions of the policy. We have a homeowner or mobile homeowner product, similar to what Andrea explained on the residential policy, covers damage to your home and certain structures, such as an attached garage. It's a catastrophe policy that doesn't cover everything your residential insurance policy might cover, such as we don't cover pools, detached structures, or fences, things along that line. We also cover damage to your belongings, the personal property that you own, loss of use. So if you're unable to live in your home during a repair, or if you need to relocate, it covers additional living expenses. Building code upgrade. Older homes, and sometimes not that older a home, will need a repair that requires a repair that includes current building code standards. And sometimes there's additional costs to that, and that coverage takes care of that. And then all of our policies have coverage for emergency repair. You need a board, window, or door. There's coverage immediately available for that. If you go to the next slide, please. We also offer a policy. Go back one, please. A policy for condominium owners. It covers damaged parts of the inside of your condo unit, like the walls, the fixtures, and the windows. It does not cover the building itself, just the inside of your condo. Also covers damage to your personal property, loss of use, building code. What's new here is loss assessment coverage. Your condominium association has a master insurance policy that covers a lot of damages, and maybe there's damage to your building or a common area building where the association will have that damage repaired and may assess you as a condo owner some of that cost. That loss assessment coverage helps pay for that cost, providing the damage is caused by it's a covered earthquake loss. Also has emergency repairs coverage. And if you go to the next slide, please, we also offer renters insurance. Our renters insurance is very affordable. It's a few dollars a month, and it will cover damage to your personal property, a loss of use to help you get a place to live while your home is being repaired, or maybe you want to relocate, and also has emergency repair coverage. Let's go to the next slide. Where can I buy earthquake insurance? Well, one place you can buy earthquake insurance, you can buy a CEA policy. If you go to www.earthquakeauthority.com or Google California Earthquake Authority, that's the first thing that comes up. You can get some direction on how to buy a policy. I mentioned we have 20 insurers that sell and service our policy. So the CEA does not sell a policy, but we can explain how to buy. So this is our landing page. Click on insurance policies. I clicked on homeowner policy, and I can look at this page and know how to buy a policy. And I can also press the policy coverage deductible button. There's a lot of options for coverages and deductibles under the homeowner policy. If you go next slide, please. If you click on the how to buy a policy button, you'll see these 3 steps. One is the premium calculator. We have a calculator. You can put in some information. I have a screenshot of that shortly. That'll help get to your premium for your home. You can see if your insurance company is on CEA's list of insurance partners. There's several places that you can look on our website. You have to have your residential insurance with one of our insurance partners to qualify to buy a CEA insurance policy. And the way to buy it is contact your agent, contact that insurance company, ask them about earthquake and coverage. If it's CEA, they will tell you, or if there's another alternative, they'll also let you know how to buy that policy. It's important to remember your residential policy that you have today does not cover earthquake. You have to buy it separately. If you go to the next slide, please. So when you log on to www.earthquakeauthority.com, this is one of the pages that'll come up as you go on our landing page. And here's a list of our participating insurers. If you click that, you'll be easily find a list of our participating insurers, and you can then see if you belong to one of those carriers. Next slide, please. All right, this is our deductible calculator. How much does earthquake insurance cost? It depends. It depends on where you live, the size of your home, how many stories, the type of construction, its age, and some other things. So you fill this form out. I'm not sure if you can see that very well. It's just some questions about your house. You click the Get Started button. It goes to another page where you put a few more details in, and you can choose coverages, and it'll give you a monthly premium. And you can choose higher deductibles, lower deductibles, higher coverage, lower coverage, and it'll immediately give you the cost of what it would cost you to have an earthquake insurance for your residents. Next slide, please. There's under the policy management tab on our website. You click that and you look for our insurance partners. This scrolls down to our 20 participating insurers. It'll give you a list of every company, and it'll have contact information where you can call them to see if they sell our policy, to see if and if you have a policy, you can pay your bill and talk about claims. But that's all through those participating insurance companies, not CEA. But we try to make it very easy to find your company and find the contact information that you might need. Next slide, please. All right. We're not the only provider of earthquake insurance. I just said through those 20 participating insurers, if you're part of that, you may buy a CEA policy. But there are other options for other companies through a company called Giavera and another company called Palomar. These are also on our website. You just click on those links, you can get there. They can tell you about their policies and what they offer. We're not here to market CEA. We're here to help people understand that there is a need for earthquake insurance. And we would like to see more people have earthquake insurance, whether it's through CEA or not. Andrea mentioned one of the biggest challenges after a catastrophic event is not having insurance, is uninsurance. I heard that many people, survivors of the Southern California fires from January 2025, did not have insurance. I heard that there was a fair amount of folks that were renting that did not have insurance. And as we know, Catastrophes don't give us any warning. They can happen very fast, can be very devastating to you and everything you own. Earthquake renters insurance is a few dollars a month. It's a very good investment for a possible catastrophe. Our recent scientific research says that there's a greater than a 99% chance there'll be a large earthquake, a Northridge size earthquake that caused tens of billions of dollars of damage in the next 30 years. No one knows when. It's impossible to forecast when catastrophes are going to happen, but we know they will. So we hope this helps everybody with a little knowledge on how to look into getting earthquake insurance and where to go to get it. And then finally, if you have earthquake insurance, you may be eligible for a discount. If you own an older home, there's opportunities to get grants to retrofit your home. And depending on the age of the home and the type of construction, a retrofitted home might get you a discount. With that, I'm here to introduce my colleague, Janelle Maffei, who's the Executive Director of the California Residential Mitigation Program. Janelle?
Thanks, George. And as our colleagues from the FAIR Plan said, there are things that you can do to improve your premium, to reduce your premium. And you can do that for fire, and you can certainly do it for earthquake. With earthquakes, what we want to do is we want to look at those older buildings, pre-1980 houses and pre-1980 multi-unit structures. So when the California Earthquake Authority was created in 1996, mitigation was included in their charge. And we manage that mitigation through the California Residential Mitigation Program. It is a separate legal entity from the California Earthquake Authority, managed jointly by the CEA and Cal OES. There are 2 board members from each of those organizations. And we have 3 mitigation programs I'd like to tell you about. The first one is called Earthquake Brace and Bolt. That's our first one we introduced in 2013. This one qualifies for up to a 25% CEA premium discount. So once again, these are older homes that would have this particular vulnerability. They need additional bolting in that crawl space. And if they have those short stud walls around the crawl space, they need plywood. We've done over 39,000 retrofits with our up to $3,000 grant, and occasionally we're able to introduce a CEA brace and bolt for policyholders. Earthquake brace and bolt is for all Californians who live in these qualifying houses that need the retrofit in areas of high seismicity. We have 2 other programs that treat a soft story problem. The soft story problem introduced when the automobile was introduced, because what happened is they took these older homes and older apartment complexes. They took out all the walls on the first floor to put in tuck under parking. And those walls were what were going to resist earthquake forces. So earthquake soft story was introduced. For single family dwellings, I always say think San Francisco if you want to think soft story, where the house is all over the garage. And then we're going to be introducing in 2026 our earthquake multi-unit retrofit program. So these may work for you, for your house, or for someone you know. If you're a renter, you may be in a multi-unit apartment complex. And this is the kind of program that your city may be implementing. We will be only in cities that have mandatory soft story ordinances for multi-unit structures. So those are very, very important programs, and there are things you can do. That's the most important things. And we have lots of information at crmp.org, information that will show you how to figure out if your structure has these vulnerabilities, what to do, and then even more importantly, we have some grants to assist you in doing that work. And we're getting additional funding, and all our registrations will be reopening, so you can give us your email and we'll let you know when registration is coming. So we'd like to thank you so much for listening, and I know at the end we'll have some questions. So thanks a lot.
Thank you both so much. I appreciate it. And finally, to close us out, we have Carlos Rendo from FEMA. Mr. Carlos Rendo serves as the Regional Flood Insurance Liaison with the Floodplain Management and Insurance Branch at FEMA Region 9. In this capacity, he acts as the region's primary spokesperson on flood insurance matters, advancing flood insurance awareness and engagement among a diverse range of internal and external stakeholders. Carlos, the floor is yours.
Wonderful. Thank you so very much. Very happy to be here with everybody. And I'll just kick it off. Residential flood insurance, this product is really, it's pretty complicated, but I love opportunities like this to make it as simple can be. So this is just a basic introduction to residential flood insurance, the National Flood Insurance Program, and just some options that are there for California residents. And so I'll just say with California, we are filled with floodplains. We have coasts all around us. We like to know that these towns historically grew up around water sources. That's where we built a lot of our homes historically. And some of the same natural beneficial functions that make this just a beautiful state to live in, keep us all very green. They are also the big causes of floods, atmospheric rivers in particular, devastating events. Um, but they also bring in all the rain that we do typically have in California. We'll have a few big different storms every year, but sometimes these are classically what deliver the big punch for Californians when it comes down to floods. But more on that later. I'd just love to just start with what is the National Flood Insurance Program. And this is a program that was born out of FEMA. Uh, a lot of floods had happened previously that Congress just didn't know how to deal with this approach, created its own program, and it's evolved quite a bit. But just know that this program is a relationship. If a community participates with us, they're able to have their residents within that community actually be able to get flood insurance. So there's some communities out there that aren't able to get access for this, but they're very rare. There's 22,000 communities across the U.S., and this is really the largest single peril insurance company in the whole world, with over 4.5 million policies sold. So there is one big catch here, and a lot of people have heard of this, a lot haven't. And in 1973, the program issued this mandatory purchase requirement. So how is it that a flood insurance policy is absolutely told to you you have to purchase it? Well, that's because if you're in a special flood hazard area, you've been mapped into an area that has been deemed as a high hazard risk area. So with that, if you have a home there and your home has a federally backed mortgage or loan with it, then your federally backed mortgage loan company is going to say, "Hey, you're in a special flood hazard area. You need to purchase flood insurance." And I'll just put that slightly different because we have a map here. These blue areas are your flood zones, and well, they pocket all over the place, and that's because these special flood hazard areas are really drawn out of modeling and maps that take in hydraulics and hydrology, just this, and LIDAR. So we do not make these maps out willy-nilly. They are years and years of the making, and they're continually being updated. But again, if you're in one of these areas and your home's here, and you have a mortgage, a loan still outstanding for your home, that is going to be a requirement through the obligation is through the life of the loan. And if you have it paid off, well, you can decide to continue to maintain that policy or not. You choose based on how you want to protect your home and your assets. And its importance to you, of course. So again, that's a 1% annual chance of flood, of inundation, and that's how these are all mapped. I'll throw out this FEMA Map Service Center, msc.fema.gov/portal home. The maps are absolutely fascinating. If you are not in a special flood hazard area, I'd say I invite all sorts of people to check out these maps. If there's ever a terrible flood in your neighborhood, sometimes you might even be able to see these and say, "Oh, we're having a flood. I remember these areas being the worst off." Maybe that changes the way you evacuate. Maybe take a different route if there's a heavy flood happening in your neighborhood. So that's there. And these special flood hazard areas start with an A or a V. If you're ever looking at these, this blue area here, that's an AE zone. V is reserved for beach areas. Those are coastal V zones. But These maps have been out since the 1970s, and they're continually being updated. They take years of work in advance to get to the point that they're officially released and become effective for communities. And well, that gets the question: who do I get flood insurance from? Actually, I'm sure I didn't miss a flood. Okay, who do we get flood insurance from? So this is kind of a mixed bag, but the NFIP program has been around so long. We have what we call WYO companies, 45 really large companies that sell approximately 80% of the flood insurance policies out there. But there's also one contractor, the NFIP. The federal contractor runs an NFIP Direct, where you just simply get it from the NFIP program. And over the last few years, we've had a significant increase now. 10 to 15% of that market share is these private flood insurance companies. And they have the basic minimum policy guarantees that the NFIP has, but they're actually able to offer some additional coverage that the NFIP program, your typical policy, doesn't. So they have a niche market, and I always say to consumers who ask me, well, what kind of insurance company do I go to? And there's NFIP and there's these private flood insurance companies. I invite folks to shop around because sometimes they're looking for a really good price, sometimes they're looking for better coverage, and so it's really based on what everybody's different needs are. So I will say the NFIP program has a coverage limit, and these coverage limits top out for a 1 to 4 family dwelling residential, let's say a single family home. The structure of that building, your home, has a maximum limit of $250,000 of coverage there and $100,000 for your contents. But that is just the structure of your building. Now, if you're asking about things that are outside of your home, like let's say that could do gazebo, swimming pool, all of those things, maybe that additional private flood insurance company might be more beneficial in that case, just because they might offer additional coverage for that. And maybe some of you are saying, 250,000 doesn't cover the structure of your home. If you think about it in terms of you take away the value of the property, the land itself, maybe 250 makes sense, but maybe it still doesn't. But I do want to remind folks, well, these are flood insurance companies that are selling the NFIP product. Big insurance companies, they're not going to say, oh, 250 is the max. Sorry, there's always this excess coverage, the coverage that they offer within that company, and say they can offer you more insurance to cover any sort of gaps that you feel are there, and that's their job. They are flood insurance companies, and that's why we work through them. And just really quickly, residential coverage also covers apartment buildings, condos, and you don't have to be in the special flood hazard area to get insurance. You can get flood insurance whether you're outside of the flood zone, if you're inside the flood zone. So we hear that a lot as one of these erroneous statements made that if you're in a flood zone, well, then you can get a flood insurance, but if you're out of it, it's somehow restricted to you. That's not quite true. And of course, condo buildings are actually, there are plenty of flood insurance policies that cover those. And you're seeing maybe non-residential small businesses, they cap out at 500,000, and you're thinking that's not much. When it comes to really big buildings, they typically go private flood insurance for their sake, and just because these caps are where they at. So I just want to say that $250,000 building coverage, maybe you can even drop it down lower. Whatever fits within your means, and also minimum deductibles, higher options. That also will change the price on what that flood insurance policy, the premium costs for you. And so, what does it cost? California, this really ranges a lot. I try to give somewhat of a broad figure, but if you're in a high risk area, the special flood hazard areas that start with an A or a V, your rates might be a lot higher than $1,600 per year. But if you're in that range where maybe it's your premium plus the fees that go with it. So they come out to $1,200. You're looking at say $100 a month for coverage that could be as high as $250,000 to cover the structure, another $100,000 for contents. There's a lot of ways that you can get to the sweet spot that gives you the coverage you want at the price that you can afford. And I will say, hey, this is actually pretty new. The NFIP program has put out a quoting tool. Under 10 minutes, you're able to basically get a quote. And after that, if you really like that price, you can just continue with it and it'll direct you to a servicer who's able to quote you at that price and sign you up for flood insurance. There's some things that you want to have on hand, basically the date or the year your home was built, very basic stuff that you might already know, what kind of construction it is, and it's very easy to get a quote on this site. So there is a waiting period, and some people say, well, that's crazy. Why do I want a wait for this policy to go in effect? Maybe there's flooding happening just down the street. I need that insurance policy right now. Well, there is a 30-day wait. That is a big surprise for a lot of folks, but there are one-day waiting periods, and that's typically happening with somebody. Well, if you basically just purchased a property and it's in that special flood hazard area, we're not going to delay your wait there. You can go ahead and purchase flood insurance right away, so zero waiting period. If there's a fire that occurred on federal lands and it's upstream of you or uphill, we recognize those being special conditions, and so that will create an opportunity for no waiting period. But let's say we talked about how homes get mapped in, and so if you were mapped in, there is this policy where, great, as soon as those maps become effective and it's shown that your home is in a special flood hazard area, you can get a one-day waiting period, and within this 12-month window, be able to purchase that flood insurance policy. So, again, who to get flood insurance from? These are really just it's up to you. I would say if you go with the company that you're normally getting your car insurance from or other types of insurance from, they typically have a flood insurance policy that they're able to make for you, or you can shop around. So with that, I want to thank you very much for your attention, and again, it was a real pleasure to be here with y'all.
Thank you so much. If I could have everybody come back on video, we're going to do a couple questions before we wrap up. I know we just have a few more minutes, so I just have a question for everybody. And again, if your question is not answered here, if it wasn't answered during the presentation, please contact our hotline, reach out to one of these organizations as well. But the first one I'm going to start with is with the CEA. So we got this question a lot. How long should a new earthquake policy be in effect in the event of an earthquake? What is the typical earthquake coverage for a duplex residential property? For example, the owner resides in the one-story dwelling.
All right, I'll take that. Good question. The CEA policy does not cover a loss from earthquake that occurs within the first 15 days or 360 hours of policy inception. So there's a 15-day wait. That's a statutory requirement of the California Insurance Code that applies to all of our CEA policies. So we will insure a duplex. We'll insure a 1, 2, 3, or 4 unit building. And if you live in that building, we'll insure your personal property and insure the building as we would a regular homeowner policy.
Perfect. Thank you. And then for the California Fair Plan, I know you kind of already talked about the discounts, but that was the #1 question that we got from you. So what specific home hardening measures currently qualify for those discounts through the California Fair Plan? And then how can consumers verify that they're receiving all available credits for that?
That's a great question. And again, there's 12 discounts. And again, 5 of them are related to the immediate surroundings. And then there's also coverages for your 5 that are specific to your structure. So, for instance, with the home, do you have a Class A rated roof? Another one is enclosed eaves, ember resistant vents. So there's upgraded windows, multi-pane windows. But the most important thing is I would encourage everyone to contact your broker and work with your broker, because they can really look at the definitions and help you validate verify if you qualify, and then they'll help you process the endorsement, because that's how you would apply the discount if you don't have it already. And you want to really make sure if there's any additional supporting information, to like providing pictures in some cases, whatever may be required. But your broker is going to be your best person to work with. So I'd reach out to them and schedule a time to discuss the discounts that you're eligible for or could be eligible for with the Fair Plan. And again, the community discounts would be Firewise, which again, our system automatically picks that up if it's been an established Firewise and an active a Firewise organization that is also still active. Our system would pick that up, and that would automatically be applied. And then the other one is the Department of Forestry discount as well. And again, that's a designated list. And right now, everyone that's on the 2024 list would be eligible for that discount. It's a community discount. But if you already qualify for the Firewise discount, you would not get both. You'd get one or the other. So, but again, I don't know if it's possible to share the attachment, but that gives that discount, but your brokers would have that as well. And the Fair Plan did recently send out a list to every single customer. I think it was about 60 days ago, just specifying the discounts too. So again, that's something that you can reference, but the first and foremost, call your broker, get with your broker, and they would be the quarterback to help you get these discounts applied.
Perfect. Thank you so much. And finally, our last question for FEMA. So this one we got a lot. If someone lives outside a high-risk flood zone, how should they decide whether flood insurance is still worth purchasing?
I really appreciate that question. It's a really difficult one to answer. But I will say, just out of example, if we have 4.5 million policies we sell, 20% of those are outside of the special flood hazard area. So that comes up to close to 1,800,000 of those policies are outside the special flood hazard area. There might be a reason that the maps are outdated, but there are folks who are at higher elevation levels. I love to tell people, well, it could flood everywhere, anywhere. 140 years ago, we had an epic flood in 1981 or 1881 that really displaced thousands upon thousands of Californians. So we never know when these things are going to come up. But at the same time, I would say ask your neighbors, talk to folks around you, and ask if flooding's an issue. And if it is, recognize that fact and get yourself some flood insurance. Thank you.
Perfect. Thank you so much. And again, if your question was not answered here, not during the presentation, please contact our hotline or any one of these organizations. And I'll have Zulemi do our closing slide.
Not on camera. Thank you everyone for joining us. And you will receive a pop-up on your screen as soon as this webinar ends. It's a quick, very quick survey, so it can just help us for moving forward. Make this as best information as possible for you. And you will also be receiving a follow-up email with all the resources that were mentioned today. So thank you everyone for joining us, and hope to see you at the next webinar series.
Thank you, everybody.
Thanks for having us.
Thank you.
Take care.